Welcome back. You're watching Market Fatafat on ET now, and let's get started with all those stocks that have been buzzing in trade today on the back of news flows and technicals. And on the technicals, we have Osho Krishan, Senior Analyst, Technical and Derivative Research, joining in with us from Angel One, while from the research team, we have Gaurav joining in with us. Very good afternoon, both of you all, and let's start with your first stock, Osho, today. You have RP Industries. When you look at it, in the last 6 months, 18-19% return, recovered from that lowest point in the last 6 months of around 600 rupees. What is the word now on RP Industries? What is the target?
Very good afternoon. Looking at the technical perspective of RP industry, then on the broader time frame, we are witnessing a kind of inverted head and shoulder on the weekly time frame. So 750, 760, this is the zone where I am expecting a strong breakout, because this is the zone where it has retracted in the recent period also. So I am expecting that if it sustains above the same zone this time, then we can see a very strong upsurge coming in this counter. On the higher end, the immediate target comes around the zone of 840 for short-term perspective, but the overall duration and overall formation on the weekly time frame has a very drastic upsurge target for this counter. But for conservative approach, I am expecting that 840 should be seen as an immediate target, while 700 and 680 should be providing a very strong cushioning to any kind of blips in future also.
All right, so that's all about RP drugs, but let's put the spotlight on Bharat Forge, because that one just came out with numbers short while ago. Sharp up move is what the stock has actually registered. Now it's come off from the day's highest point. If you look at the PAT, that's actually below estimates, but if you look at the revenue, it's come in higher on a year-on-year basis. So has the margins actually seen a sharp up move on a year-on-year basis, coming at around 27.84% versus 25.78%. What's most crucial actually in Bharat Forge earnings is a commentary coming in from the management. So you have Baba Kalyani, who's saying that he's reiterating that their expectation that forging, castings and defense and overseas business will actually see a good up move going ahead. They're saying they expect the business to see improvement in operational parameters. Also, the defense business posted a revenue of about 642 crore rupees in Q1, which is higher by about 147% on a year-on-year basis. Also, what he's mentioned is that defense order wins was about 775 crore rupees with executable order book of around 5,400 crore rupees. And they're expecting the export CV business also to remain steady. So good commentary coming in from the management and numbers. The stock is seeing up move of 1.3%.
Okay, let's move on to the next one. And Gaurav, Lupin is a stock that you've picked out for us today. Earnings is the reason why it's in focus?
Well, yes, earnings is one of the reasons why Lupin is in focus. If you look at the numbers, we have already seen that the EBITDA margin actually expanded almost by 500 basis points. We saw a strong set of numbers coming up from the company. Other than that, management also to ET now said that they are aspiring to grow almost double digit in India, and at the same time they want to focus on prescription business. Apart from that, there are brokerages also now which are being bullish on the company. So we have got Jefferies, who has maintained hold rating but increased the target price to 1900 rupees per share. What they believe is that this company is surprising us continuously for the next quarter, this quarter as well. US sales have grown almost by 9% on a sequential basis, while they have seen high single-digit revenue growth guidance in the US for FY25. And on back of this, now they have upgraded the target price to 1900 rupees per share. Talking about the stock performance, we have already seen that the stock has gone up almost by 3.5%. And in the last 15 days also, we have seen a sharp move in the stock. So definitely watching out on this counter on the back of the good sets, as well as a bullish view coming up from brokerages.
All right, so that's about brokerages, what the management said. In fact, let's hear out what the management of Lupin had to say about their growth outlook.
As we reported, our India business grew at 18%, but the IRF business, so the formulation business in India, grew by 10.5%. So I think 10.5% is the real number to focus on here. The difference between 10.5% and 18% was that we had a lot more institutional business sales within India in the quarter. We are all in on India. I think we have close to 10,000 representatives, 10,000 field force, about 7,500 representatives. We have a great portfolio. As you know, chronic as a part of our overall portfolio is 60%, the highest amongst our peers, and that's been our growth story, and certainly something that we're going to focus on as well. If you see our key therapy areas, diabetes, cardiorespiratory, these are all extremely progressive areas, and we're doing well on these. So if you look at cardio, the market grew at 12%, we grew at 18%. If you look at respiratory, market was very slow, 1.6%, we grew at 6.5%. Diabetes, we are growing slower than the market, and that's because of the in-license portfolio that we have within diabetes. Minus the in-license portfolio, our growth was actually 13.8% in diabetes as well. So as you would know, we have talked about growing at 20 to 30% ahead of the market. We're quite on track with that. So the market we expect would grow at high single digits. So we would aspire to grow at double digit for the foreseeable future.
Let's move on and talk about Atul Auto on the technicals then. And Osho, in the last 1 month, we've seen a bit of a sharper uptick coming in for Atul Auto. What is it that you are keeping as a level that you're watching out for? Currently, the stock is trading at 661. Where should we expect to move?
See, overall in Atul Auto, we have seen a very drastic breakout around the zone of 630 on monthly and weekly time perspective both. And from there onwards, there has been a decent correction from the higher zone of 820 towards the, again, 630 was the recent low that has been hit in this counter. So I'm expecting now that the neckline should be providing very strong cushioning to the recent fall, and this should be seen as an opportunity to accumulate this counter from short to medium term time frame. Again, 600 to 630 should be acting as a very strong support, while on the higher end, the immediate target looks around the zone of 740, followed by 800, 820 odd level. So the outlook for Atul Auto is very positive, and this dip should be considered as a buying opportunity.
That's all about Atul Auto, but Balaji Amines actually winning today. If you see that stock, it's actually seeing a sharp downtick above 5% or so. I believe it's because of earnings, isn't it?
Absolutely, it's because of earnings that we're seeing a downtick that has come in. When you're looking at the revenue, that's down almost 7% on a quarter-on-quarter basis. Margin also seeing a sharp contraction of around 600 basis point. EBITDA 2 down 32%. So yes, weak set of numbers that has come in from Balaji Amines, and that is why the stock is down in trade today.
All right, so that's Balaji Amines reacting to its numbers. The other counter that is reacting to its numbers has to be Ajmera Realty, because Ajmera Realty also came up with the numbers short while ago. And if you look at the numbers coming in for Ajmera Realty, let me just pull up the data for you on Ajmera Realty, because the stock actually saw like hardly any move actually on the numbers. Let me just get back to that in a short while. For you on Ajmera Realty. But Osho, let's talk about Century Ply. How is that one looking on the charts to you right now?
See, overall Century Ply has also been into a very strong uptrend, and recently the recent correction from the zone of 760 towards the 200-day SMA should be seen as a buying opportunity for this counter. So I'm expecting that the counter have started gaining traction in terms of volume and in terms of price action. So the cluster of moving average, which is placed approximately around the zone of 690 to 700, should be providing very strong support. And in the coming future, we can expect 760 to get retested. And once 760 get retested, then this counter will be giving a cup and handle kind of a formation, not perfectly, but kind of a formation on the daily time frame. So that will be having a very strong up movement from here onwards also. But for immediate basis, 760 is the target, followed by 840.
Move on to the next stock, Gaurav, BSE. This is also buzzing in trade today after its numbers. What are they looking like?
Well, yes. Talking about BSE, we are seeing a sharp up moving the stock price. The stock is up almost by 8%, and the reason being that if you look at the numbers, it has shown a significant growth. So, for example, when we talk about revenues, that has gone up almost by 150% on a YY basis. Talking about EBITDA margins, there also we have seen some kind of expansion. EBITDA margins now stands at 47% versus what it was at 33%. And when we come to net profit, now there is a one-off event, but apart from that, the net profit has gone up almost by 50% on a YY basis. We have also got some comparison with its peer, which is unlisted actually, which is NSE. And if we talk about the numbers, the revenue has grown almost by 150 basis points, while NSE's revenue grew almost by 50%. Apart from that, the margin expansion was also strong, PAT growth was also strong. So definitely one counter which is actually outperforming, at least in terms of numbers, if we compare it with its peers. And talking about the stock performance, we have already seen that the stock is moving up 8%. So definitely watching out on this counter.
Alright, BSE soaring away in trade today. But Osho, what about GMR Infra? Because this one has seen a good fair share of up move, isn't it?
See, GMR Infra is maintaining its cycle of higher highs, higher lows, and any dip towards the previous highs is acting as a very strong support for this counter. In the recent period, the counter have moved into the 3-digit number and again have seen some kind of correction because of the overall volatility in the market. But again, from the 100-day exponential moving average, the counter have started gaining traction and is now again on the verge of entering the 3-digit number. So I'm expecting that from short to medium term perspective, this counter has the potential to test the zone of 118 to 120. So definitely a buy from short term perspective, while on the lower end 90 to 92 is the zone where one should try to keep their stop losses for short term. It is basically for the short term trader.
Okay, and let's just focus and talk about railway safety. And in a move to enhance railway safety, Railways Ministry has finalized the upgraded fourth version of Kavach, termed as Kavach 4.0, which is all set to be rolled out at a massive scale across the railway network. Railway is likely to issue the first tender to equip 10,000 locomotives, and the tender is likely to be issued in a month. Sameer Dikshit is joining in with us with more details on that.
It's a big focus on railway safety. On 17th of July, the research wing RDSO has approved the fourth version of Kavach, which is an indigenous anti-collision safety mechanism, and it has been approved. It has been tested under the various climatic or the terrain condition, whether it be hilly condition, whether it be desert condition, rainy condition. Almost in all conditions, it has been tested and approved. And now Railways is going to massively roll out Kavach 4.0, not just in locomotives, but also at the station and the entire railway network. And in the same direction, a big tender of 10,000 locomotives. 10,000 locomotives are going to be equipped with the Kavach 4.0, and the tender for the same is likely to be issued within a month, most likely in September. And Railways wants to finalize this tender by October this year itself. And the tender size is roughly around 7,000 crore, because in each locomotive, the cost of installation of Kavach cost around rupees 70 lakhs. So for 10,000 locomotives, it is going to be roughly around 7,000 crore. So this is the first phase, because in the first phase, 10,000 locomotives, and in the next phase, which is around 2 or 3 years down the line, another 10,000 locomotives, the tender is likely to be floated. So this big tender is likely to be floated, and there are 5 big players who are there in the race to bag the award, who has shown keen interest for Kavach 4.2, and the names include BHEL, Bharat Heavy Electricals Limited, Keynes, Siemens. So these are a couple of big names which have shown interest. As of now, there are only 3 players who are empaneled for the rollout of Kavach, but many more players are likely to be inducted, and this will mean that the safety of a railway network is going to be enhanced and improved.
Thank you so much for that, Sameer. Definitely everyone's waiting and hoping for that to be launched soon. But on that note, we slip into a break on this edition of Market Fatafat. More stocks to discuss on the other side. Don't go anywhere.
Welcome back. You're watching Market Fatafat on ET now, and let's keep it going with the stocks that have been buzzing in trade on the back of news flows and technicals. And Osho, the next stock on the technicals that have picked out for us is HDFC AMC. Now, when you're looking at it, last 1 year has moved up from around 2,500 to 4,000 levels today, above that mark. What is the word for HDFC AMC? Should we expect a further upside?
See, for the overall stature remains positive for HDFC AMC because it is hovering above the 21-day exponential moving average. So the undertone is very positive, but in the recent period, it is going to have a very strong breakout on a sloping trend line basis on the daily time frame. So I'm expecting that for short-term traders also, it is providing some opportunity that it can surge towards the zone of 4,350 to 4,400 in the short-term perspective. So definitely a buy from here onwards, while on the lower end, 3,980 to 4,000 should be acting as a very strong support for this counter.
All right, so that's about HDFC AMC. Gaurav, let's talk about Apollo Tyres, and why is this one in focus? Earnings only?
Well, yes, this stock is in focus, and this is on the back of the weak numbers that the company has reported. So when we talk about revenue, that increased only by 1% on a YY basis, while when we talk about net profit, that actually declined almost by 24%. Coming to EBITDA margins, there also we saw some kind of contraction of around 250 basis points on a YY basis. And apart from that, pessimistic view came in from the brokerages as well. So we have got Morgan Stanley, where they have maintained their equal weighting and a target price of 472 rupees. So they have not cut down the target price, But overall, what they believe is that this result was actually below expectation. They have actually put down a new study ahead of us. What they have said that EBITDA margin, if you look at it, that has declined almost by 180 basis point on a sequential basis. Versus if you look at the peers like C8 and JK Tyre, there we have seen EBITDA margin contraction, which was a little lower than Apollo Tyres. They see that they expect that we may see modest cut in EPS in the next 12 months, and that is why they are being a little pessimistic on the stock. Talking about the stock performance also, it is down almost by 1.5%. So definitely watching out on this counter on the back of the weak set of numbers.
Alright, so that's all about Apollo Tyres, but that's all that we have on this edition of Market Fatafat. Thank you so much, Osho, as well as Gaurav, for joining us on the show and taking our viewers through the stocks that are moving in trade. No doubt it's a truncated version of the show, but wrong attribution can mislead and lead to incorrect rectification. That's the word coming in from Utpal Seth in the latest episode of Masterclass. He explains the context for mistakes and the importance of identifying them and learning from them.
Let's say you identified a stock at 100 rupees and you sold it at 150. You are very happy with a 50% gain, but that stock goes on to become 10,000. You feel, when you look back on that, that is when you realize what has happened. The second thing is, you, let's say, identified a stock at 100 rupees, made it a 0.5% bet of your portfolio, and it still becomes 10x. Again, you missed out on a lot. You could have made it a 5% portfolio, 5% of your portfolio. So, understanding different nuances of these mistakes, different dimensions, and learning from those mistakes is vital. It will make you a better investor, and it takes time.
And this is the most common thing which we hear. I bought the stock at 100, went to 150. I'm regretting because it went to 10,000. That, I think, is the most common mistake or the most common bias, at least by investors who start early, who catch these companies young, but are never able to really enjoy the journey of wealth creation.
True, but there is also a different perspective to that. People feel that you bought at 100, as in the example that you gave, and you sold at 150. That is a problem, yes. Some other people have a different problem, which is that you did not buy at 100. It has now become 150, and you have that regret. I feel that even in the second case, even if the stock has gone from 100 to 150, if you feel that it has the potential to go to 1,000, leave aside 10,000, even 1,000, then it makes sense to buy at 150. And maybe buying at 150 and going to 1,000, the risk adjusted return is equal to or better than buying at 100.
So I'll use an example to prompt a thought here. Let's look at HDFC Bank. Some would say by 2005, some would say by 2010, but everyone will say by 2015. It was like the high conviction idea. Everyone knew about the retail migration, but the stock for the longest time in its growth period was always very expensive. So how does a terminal value investor go about identifying what the right price is? Because while the stock is giving you all the necessary tick boxes, market leadership, intangibles, and mega trend, but some of these stocks I've seen in the journey, they never became cheap. They were always expensive.
True. And which is why the whole difference that we've been talking about between terminal value investing and value investing, right? So you are driven not by the value that you see in the stock today or the valuation of the stock today. You are driven actually by the terminal value that you see in that stock. You will become cautious only when you see that terminal value getting compromised. Until then, you are not driven by the value that you see today or the valuations that you see today, or the apparent, I will say the apparent valuation.
So before I move to new type of errors, there's one comment which I got on one of the chat boxes from a viewer who saw the show. He said, okay, thank you for explaining me the concept of terminal value investing. It's a different way of thinking. But is it too late for me because the bull market is already very vibrant? Am I too late to really think of next 5, 10, 15 years because markets are at an all-time high, participation at an all-time high, and valuations are stretched? So where does that fit in terms of have a lot of Indians missed that bus?
See, as I said, I have refrained from talking about individual stocks, but in the example that you gave, right, it was, I mean, any bank is valued conventionally on a price to book basis. However, exceptional banks which can deliver many quarters of consistent growth, profits, ROE with great consistency and stability, they earn the right to be valued on a PE basis, right? So something which was expensive on a price to book basis is actually cheap on a PE basis. In the same way, once you get this kind of a differentiated insight, then something which appears to be expensive today may actually be cheap in a different framework. It's up to you whether you get your conviction of a different framework or not. Not just to justify the expensive valuation today, but for you to be able to look into that potential terminal value and build your conviction on that terminal value.
Very rare investors come out and talk about that, look, these are the mistakes, this is my experience, and this is what I'm sharing, and hope you learn and you apply.
Unless you identify mistakes properly, you will not be able to understand them, learn from them, and rectify them.
The most common bias, at least by investors who start early but are never able to really enjoy the journey of wealth creation.
You did not buy at 100, it has now become 150. If you feel that it has the potential to go to 1000, then it makes sense to buy at 150.